Hey, if you're looking to create a set of financial projections for a tour business, then you've come to the right place because we have built a financial projection template built specifically for different types of tour businesses. So this could be like a walking tour, or maybe you offer a boat tour or a bus tour, or any kind of business where you're offering a tour. This is a template that's going to be a good fit for you. I'm going to walk you through how to fill this out really step by step. I'm putting a link to the template in the description of the video below so you can go grab the template and follow along. Also, as a thank you to you, if you stick around to the very end of the video, we're going to give you a discount code that you can utilize to take a discount on this particular template as our thank you for sticking around. Before I dive into the details, just a little bit of background on me. My name's Adam Huxema. I'm the co-founder of ProjectionHub. Before I started ProjectionHub, I was an SBA lender for 12 years, made over 1,500 SBA loans in my role as executive director of an organization called Bankable. And so today I'm kind of on the other side of the table here. So helping clients prepare their projections and their business plans and getting ready to present to SBA lenders or potential investors. That's a little bit of the background and kind of the perspective that I bring to the table here. If you're going through this process and you realize, hey, I need some help, so I'm going to just fill this out or customize it, reach out to us at support@projectionhub.com. We can certainly help with that. Okay, with that, I'm going to go ahead and dive into how this template works. So we're going to start here on the at a glance tab, and this is kind of the end of the process. So after you filled everything out, you're going to get a number of graphs and charts and tables and key performance metrics here in the summary data section. You can pull this into a business plan or pitch deck. You're also going to get a 5-year income statement summary, 5-year cash flow summary, a 5-year balance sheet, and then the income statement, cash flow, and balance sheet all broken down by month for each of the 5 years. Now, in order to produce all of these reports and tables and graphs, we have a little bit of work to do. We have to go back to our input tabs here and input our assumptions. So the first thing you need to know is that every cell that's highlighted in blue is an assumption you can change without breaking anything in the model. So we've got our company name. We're going to assume this is a startup. And so our projection, we can set our projection start month. Our opening cash balance is 0 because we're a startup. Let's say we made a personal investment here of $15,000 to invest into the business to help start. And then we're also going to put in an SBA loan down here in a moment. For accounts payable, we're going to assume kind of the 80-20 rule. So we're going to assume that we pay 80% of our bills in the month we incur the expense. 20% of our expenses, maybe we pay on a 1-month delay. So this could be if you put something on a credit card, you have 30 days to pay the credit card. So that's probably something you can just leave at that 80-20. Probably makes sense. Accounts receivable terms, we're going to assume that you're going to receive payment for your service upfront. So you're not going to provide the tour and then bill later. You're going to receive 100% upfront. Now, the fixed asset section. So this kind of depends on the type of business you have. So if you're doing let's say it's a walking tour and you're walking around a city or maybe a museum or something like that, you really aren't going to have much in the way of equipment probably. Now, if it's a boat tour, bus tour, doing tours on bikes or something like that, you're going to have equipment, right? And so that could be where you'd want to enter in your equipment here or vehicles here. And then we can set up a business loan. So let's say we have a $50,000 SBA loan at 10% over a 10-year term. Okay, on the revenue side, there's quite a bit here. There's a lot of flexibility in this model and what we can build out in different revenue streams. So I'm going to walk you through this kind of step by step. We're going to assume that we're offering tours 6 days a week. We've got different types. So we've got a standard tour and then specialty private tours. We can set what month we're going to start offering these different types, a maximum group size, the number of tours we can offer per day, so the number of slots we have per day, the average ticket price per person, and then the average cost per trip per person. So this is your cost. What does it cost you to actually provide the tour? This could be maybe what you're paying your tour guide could be included here. Maybe you're offering food along the way. This is your cost per person. And then this is the percentage of the tickets sold. So we're saying 90% of our tickets sold are the standard tour, 10% are specialty or private. From there, we can set a percentage of capacity filled, right? So we've got the capacity set up based on the 6 days a week and the number of tours per day. So that tells us here our maximum spots available per day is 90 based on those assumptions. And we're saying in January, we're going to be 30% full. And then maybe it's seasonal business. And so maybe the summer is the busy time. So we're at 90% capacity. And so we can set this seasonality pattern and the model will just follow that same pattern each year. And then here we can set a ticket allocation. So this is kind of based on the different types of sales channels you have. So there's a note here. Basically, the idea here is that during peak season, more tickets might be made available through high commission channels like online travel agents to maximize your reach, while off-peak periods, you might have higher allocations for your local partners or direct booking, which would have lower commission costs in all likelihood. So this just allows you to set what percentage of your bookings are coming from different channels each month. So all right, from there we kind of break down the different booking channels here. So we've got the in-person bookings, we're available 6 days a week. This is our percent or number of total tickets available based on this assumption, right? So you're saying 40% of the tickets available are being made available for in-person. And then we can say, let's say we have different places, different locations where these tickets could be sold in person. It could be the main office. Maybe you have different in-person locations that you're selling. So you can set a conversion rate here and number of tickets per transaction per day. So, somebody buys a ticket, it might be not just an individual ticket, they might be buying for themselves and a partner or a spouse or family member or whatever, right? So you might have the average order might be multiple tickets. So here's where you can set your average visitors per day. So got the average number of visitors per day and then a maximum number of visitors per day. Then you've got based on that conversion rate, so 7%. So if we're saying we've got 30 people that show up to our location to kind of take a look at our offer, we're converting 7%. So if we were to say we want to convert 10%, and see number of transaction actually goes up because we've got 30 visitors converting 10% of them, right? So that gives you your total ticket demand and ultimately how many tickets are sold with the average transaction value. So that's all just calculations. And you can also have direct online bookings. And so you can do advertising spend. So maybe this is for you're doing Google AdWords or Facebook ads and your cost per click is $2.70. And let's say your website also gets some organic website visitors. So we've got 500 organic website visitors. This drives 685 visitors to the website. Again, could have some seasonality in this. Let's say we've got a conversion rate. Maybe we should, 10% is pretty high conversion rate. Maybe we'll set that to 5% with a 2% growth rate. So lowering that conversion rate of website visitor to order a little bit, but maybe the number of tickets per transaction is a little bit higher. So maybe it's 2 tickets on average because maybe our tour is typical for families or not something you would do alone very often. You can set a price increase and a cost increase annual basis. And we can also have local partners. So say you've got different partners that are selling, it could be at a hotel, for example. So you're available 7 days. That could be sold at the hotel 7 days a week, right? Again, let's just set this to 3% annual price increase. We can set the different partners. So you could say, well, we're in Hotel 1 and Hotel 2, and this is going to open. We're starting this partnership in month 8 of the model and so on. We can set our conversion rate, average visitors per day. And again, ultimately, this kind of gets us to this number of transactions. A lot of this could be overkill depending on the sophistication of your tour business. If you don't have these local partners, and that's okay, you can just zero out this section. So you could put zeros in this blue section. And then if you wanted to hide the section altogether, so let's say, we're not going to have local partners, you can just highlight the section, right click and click hide, for example. Okay. I'm going to unhide that for now, but just wanted to show you how that would work. You can also set a sales commission. So with those local partners, you're probably going to pay us a sales commission, right? And then we have online travel agents. So other partners online that could be selling, set that 3% price increase again. You could put your different booking platforms here, conversion rate on those platforms, how many visitors those platforms are getting per day, and so on, and what the sales commission would look like for those online booking or online travel agencies. Okay, that is it on the revenue. I know there's a lot there. Again, feel free to reach out if you'd like customization or help filling that out. Here is your operating expenses. So we're going to have a few different options here. One, you're probably going to have expenses that are a percentage of revenue. So from this dropdown, you can set a percentage of revenue here. And we set that up as 3% or 0.03 is 3% of total revenue would be your credit card processing fee. Some of your expenses are going to be fixed, like maybe your insurance is $400 a month. Maybe you have different per location expenses. So you can set that up. You can have rent for an office, rent for a kiosk location that you're selling out of. Then the last tab here is our salaries tab. So you can set up the different job titles here, salaried positions, what category they're in, and you can set the categories up here. You can set their annual salary, their employer taxes, their benefits. We set their benefits as 10% of revenue, 10% of their annual salary. You can set what month they're going to be starting. So starting the owner, you as the owner or manager, you're going to get paid starting in month 1, but maybe you're going to add a marketing and sales manager in month 13. And then we can set a per location staff team. So let's say you have a part-time booking agent that's paid $15,000 a year. You're going to have 2 of them, and that's going to be based on a per location basis. So as you add additional locations, and that would be here in this in-person booking. So if you added multiple locations here, the model's automatically going to add part-time booking agents, or it doesn't have to be part-time. You can make it a full-time booking agent, but you can add the salary here, and it's going to automatically add two of those employees per location that you add. So that's a kind of a way to kind of automate the scaling of those booking agents. Okay, and that brings us back to where we started as we played around with the numbers here, so we can see, oh shoot, we're actually losing money here based on the assumptions that we have in here now. And so that would be a great example to say, hey, okay, we need to step back and see, what do we need to change? So for example, maybe we say, okay, well, maybe we can't afford this marketing and sales manager. So maybe we're going to bump them out to month 37, and maybe we're going to just remove the social media manager altogether. Maybe the business can't afford that, so we remove that position, for example. Now we can see, okay, now we're at a net income here. And again, you can play around with the assumptions to see what gets you to a level that makes sense and can be profitable and cash flow positive. Now you want to just make sure that you take a look at your cash flow statement here and make sure that this cash balance here at the beginning of the month never goes below 0. If you don't go below 0, you're still in business, right? And so that's one thing I want to point out that you should always take a look at the end of the process. Thank you for sticking around here to the very end. I know there's a lot here, and so happy to help answer any questions. You can reach out at support@ProjectionHub.com, or if you'd like our help customizing or filling it out, just let us know. As a thank you for sticking around to the very end, if you go down to the description of the video below, you'll find a link to a form. If you fill out that form, we're going to send you our most up-to-date coupon code so you can take a discount on this particular template as our thank you to you. And if you found this video to be helpful at all, I'd love it if you like and subscribe to our channel. We're going to be doing a lot more content on SBA loans and raising capital from investors, and content that I hope will be helpful to you as you start and grow your business. All right, thanks.